All right, folks, so we're joined today by Carolyn Boroden, a commodity trader advisor and technical analyst who is something of a trader celebrity in this world. Known as the Queen of Fibonacci, Carolyn started her trading career on the floors of the Chicago Mercantile Exchange back in 1978, so has seen a lot of change in her career. Since then, Carolyn has written books, appeared in magazines and on shows after carving herself a distinctive role in the world of Fibonacci, also known as the golden ratio. This has given her a powerful edge in her trading and that of her mentees too. Perhaps I should get your autograph after this, Carolyn. Welcome.
Hi, thank you. Thanks for having me.
You're absolutely welcome. It's a pleasure to have you. And the burning question, let's kick off, is why are you so bullish with Fibonacci over and above any other of the forms of technical analysis?
Okay, well, the obvious answer to me is that you can see things in the market that nobody else will see just via indicators if you do not do this work. There are basically key support, resistance decisions in these markets that you can only find using this methodology.
Okay, so it's great in terms of getting like a snapshot of the market, would it be fair to say, like the context of the market right before your very eyes? But do you not use indicators to get into the trade?
Yes, absolutely. There's definitely a place for indicators. I like to see confirmation that one of the zones that I set up has value and is worth, basically placing an educated bet against. So I do use, for example, moving average crossovers. Other people will use things like, volume and other indicators, and all of that is fine. You just want to see price action that tells you that it's worth placing the bet.
Okay, so that all makes very good sense in terms of having that extra confirmation once you have the kind of context of the market, if you will, or the market map derived by Fibonacci. But what actually prompted you originally to use Fibonacci and for it to become such a staple to your trading?
Well, actually, when I started on the CME many years ago, I was interested in taking the basic technical analysis course based on the book McGee and Edwards put out. And I took that and I liked what I saw and I thought it was pretty interesting, and I started doing some work with that. But then I actually was introduced by Robert Krause way back when, told me that I should go to this seminar over at the Midland Hotel, which is now the W in Chicago.
Oh, yes.
And I went to Robert Miner's presentation, and that was when the light bulb went on.
Oh yes, Robert Miner. He's something of a veteran in this industry.
Yes, and I do use his software.
No, it's good. Robert Miner is one of the few people who is very well established in the industry, like your good self, but doesn't have lots of marketing gimmicks like a lot of trade educators seem to have these days.
Right.
Fibonacci, it does sound, as a buzzword, it sounds very impressive to a lot of newbies, but it's a huge grey area for people who are finding their feet in financial markets trading. In terms of them applying it completely incorrectly, why do you think so many people get it so wrong from the very beginning?
Well, you kind of have to be trained at least a little bit in what highs and lows make sense as far as picking them on the charts. And also, I do it differently than most. I don't just trade against a single Fibonacci price retracement or extension. Basically, I'm looking for a confluence of the price relationships. Okay, and also I add timing to the mix. And there are so many traders that say that they time the markets, but they're actually trying to time the markets using the price work on the chart rather than the actual time axis, where you can run measurements as far as time between highs to highs and highs to lows and all that good stuff.
Absolutely. I know this is something which you do on the higher time frames, but do you also do this on the smaller time frames as well, like the 15-minute, hourly, 4-hourly?
Well, I have recently done some of the stuff on a 120-minute chart, and in the past I've done some stuff on the shorter term charts. But right now I'm really focused on doing timing mostly on the daily charts, and maybe a 120-minute chart if you're trying to figure out where a move might terminate. that timing can be helpful on something like the 120.
Sure. Okay, getting a tighter entry for a bigger move on the daily and or the weekly time frame.
Yes.
So, I mean, there are a lot of numbers out there where different people use different Fibonacci numbers. Which ones do you use? Do you have belief in the 786 and the 886, for example?
Well, I don't use 886, but I use
very rare.
382, 50%, 618, 786, and then as far as extensions, I use 1.72, 1618, and 2618. And then as far as using my three-pointed tool to compare swings in the same direction, I'll use 100% for my symmetry projections.
Okay.
And occasionally I'll use 1618, but believe it or not, I don't even have to use it that often. I get plenty of trade setups by using, the regular retracements, extensions, and projections.
Okay, great. Well, I mean, Carolyn, as I understand, you look at the higher time frames for your triggers with the 5 and 15 minute time frame, which I guess does change to the desk a little. My question to you is, say if you wanted to go away and walk the metaphorical dog and you didn't want to trade on the smaller time frames, how would you set up your orders? Would you simply do this on the daily time frame?
Well, it's a little bit more difficult to do it that way because as far as an example, like today we have a price cluster zone in Baidu that's holding up, and it's at the 233.57 to 236.96 area. And it includes 1, 2, 3, 4, 5, like 5 Fibonacci price relationships there. Well, if you're going to wait for a trigger on the daily chart, you're going to have to use something different than a 513. You're going to have to use something that will trigger you in relatively quickly. The reason why I go to the lower time frame chart is because I want it to signal an entry for you as close as possible to where the risk definition is. Okay, so the risk definition, for example, in Baidu would be either below the low end of the cluster, which is below 233.57, or underneath the low that was made prior to the buy trigger. So those are the two ways that I recommend that you do it. It's not like you can't get back in if you get knocked out the first time around. But again, it's going to be personal preference or trader's preference as far as which type of stop that they use.
I see. I mean, would typically a moving average crossover, certainly on the smaller time frame, signal an entry signal for you?
Yes. I mean, typically, my aggressive swing trade trigger is going to be an 834 EMA crossover on a 15-minute chart. And the not so aggressive signal is the 30-minute chart. So today, for example, we did, I believe we have seen a 15-minute trigger, or the aggressive swing trade trigger in Baidu. I'm not quite sure. I'll have to double check and see if we had on a 30-minute. Yeah, we don't yet have it on a 30-minute. Now, the only thing that I'll tell my traders is that if you use the more aggressive swing trade trigger, that will tend to get stopped out more often than the 30-minute chart.
Of course.
But we've had such a dramatic decline in Baidu from the recent highs, and that I think the 15-minute is worth looking at with risk definition, for example, below 236.61, where you have the potential to, even if you only correct, we'd be looking for at least a move towards the 260 area.
Okay, so I mean, with regards to placing your trades, if you weren't using the moving average crossover as a trigger, you would typically place your stop loss the other side of a fib cluster, for example.
Yes.
Okay.
Yes. Now, I prefer having a trigger because there are so many zones that will never trigger an entry. So, I'd like to see the market at least stabilize against that area. And some of my subscribers that just use the levels rather than waiting for triggers, they're typically selling credit spreads, in using options. So this way, if they have the edge by, selling those spreads, but then they also know that they need to, get the heck out of the way if that zone doesn't end up continuing to hold.
Of course, if there are breakouts or false breakouts, dare I say, they're the worst. So we've talked about the entry. In terms of management, do you scale into moves and scale out, or manage multiple positions by adding to them?
Typically, well, I'm not trading large on a lot of my stuff because I'll have like 20 different setups a day. So I may only do, a small amount. Some of my clients that have time to focus all day, rather than running, 100 and updating 100 charts.
Oh, goodness.
They're probably going to do multiple positions. Like some will do a starter position with the 15-minute chart trigger, but then add to it if it also then confirms on the 30-minute chart. And they may not get in right when the signal occurs. I typically will have them, if they want to keep the edge, wait for the pullback. So there are many secondary entries after an initial setup, starts up. Because, for example, if the Baidu zone holds, the potential, if it's a 1272 extension, is all the way up to the 297 area. There's going to be multiple opportunities to get involved on pullbacks, if we're heading up towards that area.
So, suffice to say, if you had, say, an entry on the 30-minute time frame and it went in your direction, then that metamorphosed into an entry, say, on the daily time frame, you would add to the position in that respect, huh?
Yeah.
Okay, I'm currently looking for that on gold at the moment. We took a long position on gold on the daily time frame, and we're hoping for a bullish pin bar reversal on the weekly, which is where we were planning to add. However, it looks like gold's just run anyway to the upside.
Yeah, you know what? The thing is, I did some work on the gold futures, and I didn't see the support, and sometimes the rollovers kind of muck up that data. But I did also do the work on GLD, and GLD had pretty much a perfect hit on the weekly chart because there was some symmetry there with the prior weekly declines. And let's see, what else was it? I had another projection there in the GLD. Yeah, there was also a 1272 extension. So it was very similar to a prior decline of actually $7.51, and then the recent decline was $7.55. So there was gorgeous symmetry at that last low.
Well, certainly we identified an ABCD pattern which we took long as a result of. But it has been very choppy. Yesterday we looked at it. It looked pretty bad actually, and then it suddenly reversed in our favour, which is fortunate. So, do you subscribe to the notion trade what you see, not what you think?
Yes, because, you have to trade the setups. And I tell people very often, they're like, well, so what do you think of this? Is it going to do this? And I'm like, don't worry about my opinions. You have to trade the setups, okay? So you can have an opinion and have, an idea of what you think may happen. But if you don't have the parameters for a setup, you have no reason to trade it. Because what are you going to do? Just buy it where it is and then not have a stop and hope it does what I said? You have to buy against the zone and then define your risk underneath that zone and then manage the trade from there.
Yeah, especially if it's positive reward to risk, I guess. Regardless of the news announcement, it could either go in your favour or not. But if it does go in your favour, if you've, say, got a 3-1, then great. If it goes against your trade, you lose 1% or however much you risk.
Yes, yeah. And that's also what's good about this method is typically you're going to have, a 3-1 risk reward. And a lot of times you have more than that. There can be some very extremely low risk entries where I had a counter trend trade in Tesla at the lows and it rallied over $60, in a very short time. So, the risk was probably only $3 or $4 and you got that much of a move.
That's great.
So,
fantastic. Yeah. Congratulations. I love moves like that. Who doesn't, right? So I guess it probably falls on deaf ears when you have people, we get it all the time when people kind of email us in and say, oh goodness, what are you going to do with your trades? It's non-farm payroll day tomorrow. And the general response is, so what? Yeah,
you have to just manage the setups. That's the risk definition. That's the most important.
Of course, a lot of people spend have too much emphasis placed on the setup and very little regard for when they actually get into the trade, what to do next. It's a common weakness. So what simple steps would you recommend to market newcomers for when they actually finally arrive at Fibonacci? Read your book, I guess. That's a good starting point.
Well, yeah, reading the book would be a really good start. As long as you have some basic technical information. Otherwise, honestly, I would read a technical analysis for dummies to start with if you're not familiar with charts by themselves, and then take it to the next step where you read what I do as far as running retracements, extensions, and projections, and looking for the confluence of price relationships. And then if you want to go beyond that, I'll tell you, the timing is a totally different element that very, very few traders use, unless they're, using my work or what was taught by Robert Miner or, some of the others that came before me. And it's very important, because when time and price come together, those are some of the best setups that you will ever see.
Well, we actually have that on Platinum at the moment, of time coming into the equation, and this is something which my mentor Larry Pesavento, who you may be familiar with.
Absolutely. Yeah, I used to work with Larry on the trading floor.
Yeah,
way back when.
A splendid chap. He's a great guy. I really like him. Yep. We get on like a house on fire.
Yeah.
So for the benefit of people who may not be overly familiar with Fibonacci, who are listening and are basically getting used to plotting the various points of Fibonacci, how would you identify the most appropriate swings to measure symmetry?
Well, some of it's going to take a little bit of common sense. Like if you open up a 5-minute chart and you see a new low and a new rally swing. Now, what you're going to want to do if you're trading in the direction of the trend is take the prior pullbacks or declines within the uptrend and then project those from any new high, and that's going to give you potential support. Symmetry by itself, you could use that and definitely improve your trading if you just use the symmetrical projections. I like using it all because I like to see confirmation, but you'll find that symmetry is such a simple concept but extremely powerful. So the actual definition of that is similarity or equality when comparing swings in the same direction, because many swings in a particular market will be similar to other swings. We've been seeing that, for example, in the crude oil for months. So every time that crude pulls back, I run the projections of the prior corrective declines within the uptrend, and I project them from the new high. And for example, we had a zone today, 70.21 to 48, that comes from all of those prior declines that are similar. So that decline is $2.38 from the high in the July contract. And if you go back on the same chart, you'll see, for example, I have another swing that was $2.42, which is very similar to 238. And that's part of the symmetry that I projected to watch for a new low. And we have seen a bounce off of that area because the low is made at 70.52 and it has at least bounced to 71.15 area. So symmetry, again, very simple concept with similarity or equality when comparing swings in the same direction. And if you just use that, you will improve your trading.
So there we go. An exercise in identifying key swing highs and swing lows, I guess, is mandatory before you even get to Fibonacci.
Yeah. Now, what happens with that is, like when I teach classes, I tell them I had a student come out when I used to live in Scottsdale, Arizona, and he knew all the tools that he needed to use to run the retracements and projections and extensions. But then he's like, well, but which ones do I use? And I literally had to go over about 40 charts and show him, okay, these are the swings that I would use and why. And then it clicked in his brain, and and then he actually went and wrote a book about it. So,
oh, did he?
It worked, and he's now making a living off of doing this work. So
fantastic.
I know it's possible. It does take a little bit of patience. What I tell my subscribers or students, if they want to learn how to do some of it, go ahead and use my free charts on Twitter. And when I put something out, and see if you come up with the same results. And also, if you find that you're getting too many price relationships that come together, you probably need to use, larger swings, because if you run a retracement of a very small zone and you have support, within 5 cents of the other support, that's not helpful. Okay. So it's a little bit of, trial and error, and, trying to match up with, what somebody else that has experience, can do. And, it is possible, because I have classes and people have said, okay, thank you very much. Now I know how to do it. I don't need you anymore.
Well, hey, that makes your life easier, doesn't it?
Yeah. Well, I told them, well, you got to know, because, eventually I'm going to retire. So
yeah. Well, you've been at this for a while now. And
a lot of years.
So since the 1970s, you must have seen a lot of change, actually, thinking about it, since your time in the pits trading, and to this day seeing the proliferation of social or copy trading, I think they call it, and of course the rise of cryptocurrency. Do you think that these are here to stay, or merely a fad?
Well, I think the cryptos are probably here to stay. The only problem is, some people should not get involved with it, because, what if they regulate it and, and all of a sudden your money disappears? If you're not okay with that being risk capital, you should not be messing around with the cryptos. If you're okay, or maybe you try one of the lower priced cryptocurrencies, and you're willing to risk all of that money, then fine, that might be okay for you. But all of a sudden, when, my Uber drivers were asking me about Bitcoin, when I told them that I was an analyst, and, my friend and their grandparents were asking about it, I said, oh my God, this is going to be at least temporary top, because they're going to run out of buyers. And that's actually, where we had peaked out just a while back, when, everybody's grandma was asking about it.
It's true, and certainly before Christmas, the last trading day, I know Bitcoin trades 24/7, but the last trading day before Christmas, in terms of like when stocks or equities are traded, what was interesting is Bitcoin collapsed by about 30%. And I think that a lot has to be said for the smart money quietly unwinding whilst the world and his wife are busy preparing for Christmas.
Right.
And really identified that. But we were talking actually earlier about Bitcoin and Ethereum and all these other cryptos, and it seems that you talk about the traditional kind of like bubble and the smart money getting in first, whereas the kind of the bus driver, the Uber driver, every man on the street or woman on the street invests. That's when you know it's the end of the market. But somebody mooted the idea that actually cryptocurrencies could potentially be a bottom-up bubble, where it is every man on the street getting invested first, and the last people to arrive are potentially the bigger funds. It's an interesting logic.
Yeah, I have not done it myself. The only thing that I've been willing to look at was actually Bitcoin futures, if somebody wanted to day trade. But as far as, overnight risk and all that, personally, I don't really have an interest at this point. I missed the boat. I was told years ago about it, and I was so busy doing, what I already did, that I didn't do anything with it. And now, to me, I'm saying, yeah, right now, I'm not going to touch it.
Well, it's interesting you talk about Bitcoin futures. I saw his interview with Jordan Belfort, of all people, aka the Wolf of Wall Street, and he basically stated in his infinite wisdom that as soon as they launch the Bitcoin futures, that's the end of the market. So we'll watch his words.
Yeah, well, but guess what? You can short it too.
Yeah,
right?
that's the great thing about it.
Yeah.
So Caroline, thank you so much for your time. I appreciate you're busy and you've got your community. I think you're on a call a little bit later. So lastly, for those people who are listening who want to find out more about what you can offer them, where can they find you?
There's actually, my website, or my landing site is called FibonacciQueen.com. So there's a lot of information there. I believe the free videos are linked there. You can also find me on Twitter under, I think it's regular Fibonacci Queen on Twitter, and I try to post at least one free video a day as long as I'm not traveling. So those are the places, my website or Twitter.
Wow, there we go. FibonacciQueen.com. Watch those words. Carolyn, thank you so much for joining us.
Well, thanks for having me.